One of the biggest reason why new traders fail in stock market because they try to follow big traders. They try to follow the successful traders trading style. That means they follow them on Twitter, Facebook or Instagram or YouTube, and they try to do it what other big traders are doing. And finally they blow up their capital. Out of 100 traders, almost 90 traders they fail in stock market. Out of that 90%, almost 50% of them they quit stock market, they quit trading, and they keep saying everybody that stock market is a gambling, and they tell their sad story to everybody saying that how big they lost in stock market, everything. They never accept that they lost money because of their gambling mentality. And remaining 50% they again re-enter stock market with the revenge mode, and they say that I lost money in stock market, now I have to recover from stock market only. Even I have seen some traders, they are so revengeful that they also say that I lost my money in this particular stock, I want to recover my money in that stock only. So that kind of revenge some people have, that whatever the money they lost in a particular stock, they want to recover their money in that same stock only. They don't want to recover from any other stocks, same stock only. So that kind of revengeful mode. And what they do, in the hope of recovering their loss, they start contacting every big traders, asking them to help them to recover the loss. And same time there are many Telegram channels which are waiting for this kind of opportunity. That means they are waiting for this kind of opportunity where a trader desperate to recover their loss, and they say that I'll help you to recover the loss and pay me this much subscription fee for months and I'll help you recover your loss. And that new traders already he lost in the market earlier, again he will pay to fake Telegram channels and again he'll lose money. That is what the many new traders do, the mistake of going back to tips provider on Telegram channel and again losing money. So remember, revenge trading to recover your past loss is not the way to think. Whatever you lost in stock market is not longer yours. You need to start it again as a fresher from scratch, building bricks by bricks like a disciplined trader. Starting with a small capital and trying to build that capital, and that is how successful career in trading is done. And that is the objective of today's video. In today's video, I am going to show you how to grow a small trading accounts. In today's video, I am going to discuss 4 important things. One is I am going to discuss strategy which you can use to grow your small trading account. I am going to discuss one simple, powerful strategy which have a very good risk reward. And second, I am going to discuss which instrument you have to trade and why you have to trade. Whether you have to trade in future and option or stocks or commodities, whatever it is, that is what I am going to discuss. Which instrument to trade to grow a small trading account. Then I am going to discuss how you can cut the brokerage cost, and finally I am going to discuss power of compounding. Why they say that risk management is holy grail of trading. Strategy can fail, but risk management can never fail. So these are the 4 things I am going to discuss in today's video. So now let's go to my laptop and let us discuss all those 4 things one by one. Okay, first let me start with the trading journal and show you the power of compounding and why they say that risk management is the holy grail of trading. So this is the trading journal which I am going to discuss with you, and after this you are going to be surprised how easy to grow a small trading account if you are a disciplined trader. The most important, you have to be a disciplined trader. And first thing you can see that there are levels I have marked. This is the level, right? First is the level, next is the trading capital. Remember, I have taken a trading capital as a 50,000 just for an example. Okay, just an example I have taken. It's not necessary that you have to have minimum 50,000. You can start with the lesser than that also. Just I have taken something average around 50,000. Next you can see that I have discussed maximum risk and minimum target. That means I have discussed how much you can maximum risk in a trade and how much should be minimum profit. And I have discussed if your target hit, how much you are going to make profit. If you follow me from long time, I keep saying that never risk more than 1% of your capital, but here I am saying 2% of your capital. Why I am saying? Because it's a small trading account. If you are trading with a big trading account, then I never suggest more than 1% risk, more than risk of 1% of your capital per trade. But this is a small trading account. In small trading account only, I can suggest maximum 2% of your capital per trade. But same time, if you are keeping 2% of risk per trade, 2% of your capital per trade, then your profit target should be double of that. That means it should be 4%. It can't be 2%, it should be 4%. Okay. Now let us see power of compounding. 50,000 can grow up to 1,55,000 just by risking 2% in every trade. Yes, I totally agree that This is not possible that every day you make profit. This is just for illustration, just to show you the power of compounding, just to show you that how powerful risk management. It is totally not possible that every day you make profit, that I also know that. And you can see here I have given level 1 to level 30. What is that level 1 to level 30? It is not 30 trading days, or it's not in 30 days. It is to show that once you grow your capital from 50 to 52,000, you can mark it maybe whichever color you want, maybe yellow or green or something, you can mark it. Once you cross 60,000, then you can mark that level that you have crossed 60,000. Or if you have crossed 71,000, you can go and mark that level. Levels only for your understanding that you are trying to go from level 1 to level 30, which can help you to grow your trading capital. I have given you 50,000 as an example. Suppose you start with 20,000, and you can see that 20,000 can grow up to 62,000 if you follow risk reward. It is not possible that within 30 trading days you are going to make this profit with 20,000. It can take more than that. That means sometime there will be loss. It is not that every day profit happens. Sometime will be loss. But you should ensure that you should never lose more than 2% in any trade. That should be discipline one should have. Okay, it can be done only if you have a discipline. And reward I have given 4%, that is the double of it. If you take the risk of 2%, then at least ensure for 4%. And sometimes more than 4% also possible. For that, I am going to discuss which strategy you can use it, which instrument you can trade it. Everything I am discussing in this video. But now only focus on this Excel sheet. How powerful is the power of compounding and risk reward in trading. Suppose somebody have a 1 lakh capital, and just for risking only 2% over the period of time, it can grow up to 3,11,000. That means not risking more than 2%. Okay, this is the trading journal where everyone can have it and write down whatever your trading capital. Here just for an example only I have taken that 50,000 can grow up to 1,55,000, but never be under impression that I am saying within 30 days. Over the period of time, it can grow from 50,000 to almost 1,55,000, provided you follow risk reward. And what I have mentioned here, you can see that here I mentioned about the notes. What actually notes? Notes is important for every trader. That means you fill this trading journal after market closes every day, and you have to write down your feedback. That means sometimes it must have happened that you have taken a wrong trade, you have not followed risk reward, or you have booked your profit too early. Whatever happened that day, that should be written down here in the notes. So that is very important. That means next time when you are trading, you remember what mistake you have done. If you are not written down in trading journal, it's not possible that after 1 week or 15 days you will remember what mistake you have done. So very important that trading journal have a one column for the notes where you will write down whatever the mistakes you have done. And remember that when I said 2% of your risk, here your trading capital is 50,000, 2% of risk is 1,000, right? But when your capital goes to 80,000, your risk is not 1,000 rupees. Your risk become 1,600. That means now your 50,000 trading capital has become 80,000. Now it is 2% of this capital. That is how power of compounding works. That is why they say risk management is the holy grail of trading. Strategy can fail, but risk management can never fail. When you are trading with a small capital, each penny cost, right? Each penny saved is penny earned. That means it is not possible that you can make profit in every trade, but it is possible that you can cut other cost. Other cost mean I am talking about the brokerage. You can save on the brokerage. How you can save on the brokerage? That is what I am going to discuss in the second point. Which are the brokers where you can save on the brokerage? And one broker I can suggest for new trader is one of the broker called M-Stock. Okay, M-Stock is one of the broker where you can get zero brokerage with just paying one-time fee of $9.99. One-time fee of $9.99. But please remember, it's not a sponsored video. I'm not going to get any financial benefit from M-Stock for recommending their brokerage. It is just for the benefit of a new traders. And you can see here from equity delivery free, equity intraday free, futures free. But you have to pay one-time fee of I think around $9.99. You have to check that with them how much you have to pay. And that is what I can recommend for a new trader, because when your trading capital is small, you have to save on everything, right? one of the way to save is the brokerage, and you can open trading account here so that you can get a zero brokerage. And second one I can suggest is the Kotak Securities. Even Kotak Securities, they have something called zero brokerage for age under 30, and for age above 30 also they have zero brokerage. For the age above 30 they have 20 rupees per order. For the age under 30, even for F&O carry forward also it is zero. But here also you can see that they have a 1 year fee. That means you have to fee of around 299 first year. But as I said earlier, this is not a promoted video. This is not a sponsored video. I made more than hundreds YouTube videos, but you have never seen me doing any sponsored video. So this is also not sponsored video. Even though I recommended these two brokers, but I don't trade in them. I don't have a brokerage account with neither in Kotak Securities or M Stock. And you see me most of the time, I trade in Zerodha. I use Zerodha most of the time. They charge me 20 rupees per order, and I am happy with that, paying 20 rupees. So that you have to take a call whether you want to go for a zero broker or you have to go for a discount broker. And now next I am going to discuss instruments where you have to trade. Because what I have seen that most of the new traders directly they get into the future and option. Future and option is very risky instrument. If you don't have knowledge, then you are going to lose big money in future and option. You have to have a good knowledge about especially option, like option Greeks like Theta, Vega, Delta and all this. And many new traders, they do the mistake of getting into option without knowledge because they don't know which strike price to choose. They don't know whether to go for ATM, OTM or ITM. They don't have knowledge about the theta, time decay. So to trade in option, you need to have good knowledge. So what I suggest, which instrument I suggest? I suggest you to start with the stocks. Start with the stocks, not with the Nifty, Bank Nifty, not with the future and option. Why I suggest trade in stocks? Because the strategy which I am going to discuss next is most of the time can work in stocks. And also one more thing is, when you are trading in stocks, you don't have to worry about the theta. You don't have to worry whether ATM, OTM or ITM which you have to select. You don't have to worry about the delta, vega and all this. Just buying in the cash. That means no future, no option. Suppose it can be ICICI Bank. Suppose it can be HDFC Bank. Suppose it can be Reliance stock. It can be any stocks. Whichever the stocks comes under your radar as per the strategy, you can go for it. You don't have to worry about expiry day, non-expiry day, nothing. But I suggest go for a large cap stocks or mid cap stocks. Don't go for penny stocks, small cap stocks, because small stocks will not have much liquidity. First 1 hour, don't take any trade. Observe the market, then only start trading in the stocks. And which stocks you have to choose, what is the strategy, that I am going to discuss next. Now let me go to the whiteboard and let me show you the strategy which you can use it for growing your small trading account. Okay, go to the watch list in the stocks and look for stocks which are in the trending. Look for the stocks which are in the trend. It can be uptrend or it can be downtrend. If you ask me, I suggest start with only uptrend stocks which are in the uptrend. When a stock is in the uptrend, mean most probably big players are buying the stock or there is some news. So that is why look for stocks which are in the uptrend. And what strategy you can use it? You can use one of my favorite strategy, 20 EMA pullback strategy. Because why I am suggesting this strategy? Because this is the one of the simple strategy for a new trader, and this strategy have a very good risk reward. Focusing on this strategy can give you edge. And the reason why I am saying that trade only in stocks, because other than not to worry about the options and all this, Nifty, Bank Nifty doesn't trend every day. You will see very rarely they are trending. But when you go to stocks, there are hundreds of stocks. At least 3-4 stocks you will see every day it is in the trending. Only focus on this strategy, 20 MA pullback strategy. If you don't know much about this strategy, I already made a video a couple of years back. That was Diwali special video. That was 20 MA trading pullback strategy. You can watch that video if you don't know what is 20 MA pullback strategy. But just to brief you, 20 MA pullback strategy means plot 20 MA on your chart. Go for 5 minutes time frame on candlestick. First 1 hour only spend time on doing the analysis, doing the research. Stocks which are in the trending mode. In first 1 hour, most of the time you will come to know which stocks are in trending. And look for the stocks which comes near the 20 MA. Which comes near the 20 MA, and once it makes bullish pin bar or once it makes a power candle, then go long. And keep your stop loss how much? 2% of your capital and reward at 4% of your capital. So that's about which strategy to follow to grow your small trading account. If you have not seen this video, go to my video section, and around couple of years back I made that was a Diwali special video on EMA pullback strategy. Watch this video and learn how to use this strategy. This strategy mainly I discussed in Nifty Bank Nifty, but you can try the same strategy on the stocks also. So that's about today's video on how to grow a small trading account. And if you want to learn more about day trading, then I have a day trading webinar called 25 day trading strategy in Nifty Bank Nifty. You can go below this video in the description section and check when is my next day trading webinar. If you are interested, you can contact me on WhatsApp or email and you can enroll for my next webinar. That's it guys. I'll see you soon with a new video. Until then, bye and take care.